Now, this is an illustration showing the preparation of the bank reconciliation statement after adjusting the cash book. Here we have the following is the bank column of the cash book of Clean Ventures Limited and the bank statement for the month of March 2020. You are to adjust the cash book and prepare the bank reconciliation statement as at that date. Here's the cash book. Remember, your cash book, when you make payment, you credit. When you receive payment, you what? Debit. It's bank because it's going through the bank. And now the bank will also send you their bank statement. This is the bank statement. So what it means is that anything that appears in the credit of the cash book should appear in the debit of the bank statement. Anything that appears in the debit of the bank statement should appear in the credit of the what? Anything that appears in the debit of the cash book should appear in the credit of the what? Bank statement. So it's vice versa. If the bank is crediting your account, you expect to debit your cash book. If the bank is debiting your account, you expect to credit your what? Cash book. So that is the technique you're going to use to adjust the cash book and at the same time prepare the bank reconciliation statement. Now we're going to adjust the cash book. For you to adjust the cash book, you must identify items in the credit side of the bank statement that are not in the debit side of the cash book. So those items that are here in the credit side of the bank statement that are not in the debit side of the cash book will go to the debit side of the adjusted cash book. Items that are in the debit of the bank statement that are not in the credit side of the cash book go to the what? Credit side of the what? Adjusted what? Cash book. So basically, we look at the cash book. What's the balance in the cash book? It is a debit balance of 436 now. Remember how to balance your cash book? You can go back to the topic cash book and understand that. So remember I said you have a debit balance when your debit side is higher than your credit side. You have a credit balance when your credit side is higher than your debit side. So here, you have a debit balance. Your debit side here is higher than your credit side. By how much? 436,900, which is the balance carried down here. It becomes the balance what? Brought down. So it's the balance brought down aspect that we're concerned about. So the BD, which is the balance brought down, is on the debit side. So we'll go to our adjusted cash book now. We have adjusted cash book. Balance brought forward, 436,900 debit balance. Okay? So now let's adjust the cash book. How do you adjust the cash book? You look at your bank statement. Any item here that is not in the cash book must go to the adjusted cash book. So let's treat the credit side first. So this is the bank statement credit side here. I have 1.3. Is it in the debit side of the cash book? Remember I said anything in the credit side there must be in the debit side of the cash book. So 1.3 is in the credit side of the bank statement. Is it in the debit side of the cash book? Yes. Okay. Yes. This is the cash book. Okay. It's in debit side. So that means it cannot cause what? It can't cause a reconciliation difference. So that's clears. The next one in your bank statement here is 200,000 credit side. Is it in the debit side of the cash book? Yes. So that cannot cause a discrepancy. Cleared. The next one is 70,000. Is it in the debit side of the cash book? No. So that can cause a discrepancy. So we adjust the cash book. So 70,000 here. What's written against it? Dividends. That's like a direct credit. Okay. Maybe the company has shares in some companies that pay dividends directly to the bank. That's kind of the scenario. So, but there, the problem is that there's a credit item here that is not the debit side. So we'll pick it and I'll take it to the adjusted cash book debit side. So we have 70,000 here. What's the dividends? What's the next item here? 295,000. Is it in the debit side of the cash book? No. So we'll pick it straight to the debit side of the adjusted cash book. We have 295 and we have Carlo Limited. That's it for here. The next one is the debit side of the what? Bank statement. Whatever is in debit side of the bank statement must be in the credit side of the what? Cash book. So what do you have here? 350,000 in the debit side. Is it in the credit side of the cash book? Yes, it is there. Okay, it is there. So that clears it. The next one is what? 50,000. Is it in the credit side of the cash book? No. So this can cause a discrepancy. What's the subscription? That's like a standing order. So we take it to the credit side. 50,000 subscription. The next one there says 323,100. Is it there in the cash book? Yes. Okay. Now that clears it. So the next one, 25,000. Is it in the cash book? No. So what is it? Account maintenance charge. So the bank charged you. So we'll come here, bank charges, credits, in the adjusted cash book. The next one here, 1875. Is it in the credit side of the cash book? No. So we have 1875 here. VAT or maintenance charge. We have 1875. So that's all the items. So we'll balance the adjusted cash book again. So we have all the items in the debit here. We have all the items in the credit here. So the difference between these items and this item is 725025. That's the balance carried down. That becomes the balance brought down. Okay? So that is it for the adjusted cash. So you transfer this balance to what? The bank reconciliation statement. So we have bank reconciliation statement as at 31st March 2020. So we have balance as per adjusted cash book 725025. Okay, now we now have to prepare the bank reconciliation statement with what? Items in the cash book that are not in the bank statement. Remember, we prepare the adjusted cash book with items in the bank statement that are not in the cash book. Now you prepare the bank reconciliation statement with what? Items in the cash book that are not in the bank statement. So let's go and check. Let's do unpresented checks. Unpresented checks are checks that have not gone to the bank as a reconciliation period, or we can say undebited values. Undebited values are values that has been credited to the bank, to the cash book, but has not been debited to the bank or statement. Those are unpresented or undebited values. So let's go. Here's the cash book. Whatever is in the credit side here is expected to be in the debit side. So 350,000 is in the credit side of the cash book. Let's check if it's in the debit side of the bank statement. This is a 350,000. So that clears. 280,000 is in the credit of the cash book. The credit of the cash book. Okay, is it in the debit of the bank statements? No. So this is an undebited value or unpresented check. Items appear in the credit side of the cash book that are not in the debit side of the bank statement as at the time of reconciliation. So we come here. Bank reconciliation. We have add unpresented checks. Office furniture, 280,000. That is what we have here for the 280,000. Okay, you gave out the check, but the guy has not gone to the bank to collect it. So you've recorded the payment in the cash book, but the bank has not yet recognized it in the what statement. The next one is 480,000. 480,000 is in the cash book. It's expected to be in the debit side of the bank statement. Is it there? No. So that's also an unpresented check. So we have purchases here, 480,000. That is what we have as a description in the cash book. Purchases 480,000. So is there any other item? Let's come and check. So we've done 350, 280 has been picked. That's the office furniture. 480, that's the purchases by check. 323,100. Is it in the debit side? Yes. So that clears it. I think that's the last item there. So that means we have two unpresented checks. 280 and 480. So 280 plus 480 is 760. 760 plus 725025 is 1485,025. Remember, we are adding unpresented checks and then lessing uncredited checks. So let's identify the uncredited checks. Uncredited checks are items in the debit of the cash book that are not in the credit of the what? Bank statement. So let's go. 1.3 is in the debit of the cash book. Is it in the credit of the bank statement? Yes. 200 is in the debit of the cash book. Is it in the credit of the bank statement? Yes. 370, remember we are looking at the cash book against the bank statement. So you have to be careful so you don't mix things up. 370 is in the debit side here. Is it in the credit side of the bank statement? No. So what do you have? You have payments, sold goods received check for payment, Kemi. So that's the uncredited item that we have there. So we have less uncredited checks, Kemi, 370. So 370 is here, your minus is in bracket. So if you minus 370,000 from 1485,025, you have 115025. So this is the balance as per the bank statement. So for you to know if you have reconciled the difference, you have to go and check what the bank statement balance is. So here, 31st of March, as you can see, the last item here is what the balance here is what 115025. So you check, is it the same thing? 115025. So your reconciliation difference is what? 0. That is this value minus the balance in your bank statement. So that shows that you have reconciled the difference. So usually in business organizations, someone will prepare and someone will check it. So say prepared by K. Rollins, checked by what? B. Agbenos. Anybody can be the preparer, anybody can be the checker, depending on the what process of the organization. But this is just the way a bank reconciliation statement is prepared after adjusting the cash book. Now, this is an illustration preparing the bank reconciliation statement without adjusting the cash book. So here we're just preparing the bank reconciliation statement directly, no adjusted cash book. This is what you get basically in practice. Okay, the first one there is basically for examination condition, but here you have something like this in a typical practice. So we're using the same question we use. The following is the bank statement of the cash book of Clem. The following is the bank column of the cash book of Clem Ventures Limited and bank statement for the month of March 2020. You are to adjust the cash book and prepare the bank reconciliation as at that date. Now remember, I said we are not adjusting the cash book. Now we're using the same question to prepare bank reconciliation statement without adjusting the what? Cash book. So I'm going to take you through that. Okay. Now this is the question. It's the same question, but we want to prepare the bank reconciliation statement directly without adjusting the cash book. It's the same approach. Okay. Remember, I told you. I said whatever is in the debit of the cash book must be in the credit of the bank statement. Whatever is in the debit of the credit of the cash book must be in the debit of the bank statement. Whatever is in the credit of the bank statement must be in the debit of the cash book, and whatever is in the debit of the bank statement must be in the credit of the cash book. That's the approach. So you start with the cash book. What is here that is not here, you capture. Okay. And then what is here that is not here, you capture. So that is just what it is. So first of all, let's check what is in the cash book that is not in the what? Bank statement. Okay? Or we can say, let's check what is in the bank statement, okay, that is not in the cash book. So you can do it, but remember you are adding, okay, anything that will what? That is expected to what? Increase the cash book balance, and you are deducting anything that is expected to what? Decrease the cash book balance. That's the idea. The idea is that I want the cash book balance to be the same thing with the bank statement balance. So anything that should increase the cash book balance, you add. Anything that should decrease the cash book balance, you what? You deduct. So let's start with this. Remember, you have bank reconciliation statement. Okay, You have bank reconciliation statement as at 31st March 2020. Balance as per cash book 436,900. Remember, when we are adjusting the cash book, we will take this balance to the adjusted cash book before bringing it to bank reconciliation statement. But now we are picking the balance in the cash book directly. That's what you have here. The balance brought down is a debit balance, so you have it here positive. But if it's a credit balance, this will be a negative. But because a debit balance, you're putting it here as what? As positive. Okay, so let's go. First of all, let's say what are the items in the credit side, okay, of the cash book that are not in the debit side of the bank statement. So let's pick them. 350 is in the cash book. Is it in the debit side of the bank statement? Yes, so that clears. 280 is in the credit side of the cash book. Is it in the debit side of the bank statement? No. What do you have there? Office furniture. So we have unpresented checks. Office furniture, 280,000. The next one, 480,000. Is it in the debit side of the bank statement? No. What do you have? Purchases. So we have purchases, 480,000. Okay. Is there any other item that we need to check? No. Now that you have checked what is in the credit side that is not in the debit side of the bank statement, you will now do what is in the debit of the bank statement, okay, and that is not in the what? Credit of the what? Cash book. Okay. Am I making any sense? Okay. Now you will also do what is in the debit of the what? Cash book that is not in the credit of the bank what? Statement. Are you with me? So to make it easy, we have done what is in the credit side of the cash book that is not in the debit of the bank statement. So let's do the credit of the bank statement as well. It makes easier that way. When you do the credit of the cash book that is not in the debit of the bank statement, you do what is in the credit of the bank statement that is not in the debit of the what? Cash book. So let's go. 1.3 is in the debit of the cash book. Yes, that clears. 200 in the credit of the bank statement is in the debit of the cash book. Yes, that clears. 70,000 is in the credit of the bank statement. Is in the debit of the cash book? No. So you pick it here as direct credit, dividend, 70,000. Then the next one, 295 is in the credit of the what? Bank statement. Is it in the debit of the cash book? No. What do you have there? Carly Limited. You have 295. Is there any other item? No. Do you understand? I'll repeat it again. What I have done is, the first step is pick items in the credit of the cash book that are not in the debit of the what? Bank statement. Add it. Take them as what? Unpresented checks. After treating the credit of the cash book, treat the credit of the bank statement. Okay? That's the second approach. Those are the things that go together. So the credit of the bank statement against the debit of the cash book. So now we have these four items: 280, 480, 70, 295. When you add it together, you have 1,125,000. So when you add 1,125,000 with 436,900, you have 156,900. So we have done credit of the cash book and credit of the bank statement. So let's do debit of the cash book and debit of the bank statement. So let's go. Debit of the cash book. Item in the debit of the cash book, not in the credit of the bank statement. So we have 1.3 in debit here. Is it here? Yes, it clears. 200,000, okay, in the debit of the cash book. Is it here? Yes, it clears. So 370,000 in debit of the cash book. Is it in the credit of the bank statement? No. So we'll pick it as uncredited check. 370,000. Remember, I said once you do the debit of what? The cash book, you must do the debit of the bank statement. That's how it flows. Once you do the credit of the cash book, you must do the credit of the bank statement. So we've done the debit of the cash book, so we have to do debit of the bank statement. So the debit of the bank statement says what is here that is not what here. So what is in the debit of the bank statement that is not in the credit of the what? Cash book. So we have 350 in the debit of the bank statement. Is it in the credit of the cash book? Yes, that clears. 50,000, okay, is in the debit of the bank statement. Is it in the credit of the cash book? No. What do you have? Subscription. So that's it. Subscription direct. So that's 50,000. So what else is here? Debit here. 323,100. Debit of the bank statement. Is it in the credit of the cash book? Yes. That clears. The next one, 25,000 in the debit of the bank statement. Is it in the credit of the cash book? No. So we have bank charges, 25,000. The next one is what? Another one, 1875 here. Is it in the credit of the cash book? No. What do you have? VAT on maintenance, that's bank charges as well. How much? 1875. So that's all the items. So what do we add? 1, 2, 3, 4 together. It gives us 446,875. Your lesson. Okay, so what do? You minus this from this. It gives you 115025. You check it against the balance as at the bank statement there. This minus this, it gives you 0. So that means there's no reconciliation difference. So that means that what? The discrepancy has been cleared. Prepared by Rollins, checked by what? Agbenuga. So that's based on the person that is checking and always preparing. So the idea here again, I'll say it again, is that what? You are checking cash book against bank statement against cash book. When you check the credit of your cash book against the debit of your what? Bank statement, you must then check the credit of your bank statement against the debit of your what? Cash book. All the items there, add it to the balance as per the cash book. Then you now go ahead, check items in the debit of the cash book against credit of the bank statement, and then check debit of the what? Bank statement against credit of the what? Cash book. Items identified there, what do? You less. That's it. That's how to prepare bank reconciliation without adjusting the what? Cash book. Now this illustration is another form so that they are not giving you the cash book and the bank statement to compare. They've already identified the items and they're telling you to prepare adjusted cash book and what? Bank reconciliation statement. So you just be picking and then putting there. Okay? So what do? In the question, they will give you the balance as per the cash book. Put it there. And then they will tell you the uncredited checked item and the uncredited checked item. Just put them where they what? They're supposed to be. So, but you must know if it's a cash book item or if it is what? A bank reconciliation item. The bank reconciliation item is basically what? Unpresented check and what? Uncredited checks. Okay? So what do? You add unpresented checks and less uncredited checks to the what? Adjusted cash book balance. Okay? But first of all, you must adjust the what? Cash book. So this is just a very simple question. They say the following were identified as the discrepancies between the bank column of the cash book of Mawena Ventures Limited and bank statement for the month of February 2020. You have to adjust the cash book and prepare the bank reconciliation as at that what? Date. They said the cash book balance as at the February and it showed a credit balance of what? 126,000. While the bank statement balance showed a debit balance of what? 250,000. OD. OD means overdraft. That means you have withdrawn more than what you want. What you have. Okay? So now, what are the other discrepancies? The first, they say a dividend of 25,000 for shares held in public company has been in the bank statement only. Okay? Now, a check totaling 350 has not been presented as at the time of that's unpresented checks. The bank has a standing order to some payment on behalf of what? Businesses on behalf of the business to the tune of 56,000. This has not reflected in the what? Cash book. Bank charges and VAT totally 112,500 has been debited to the what? Bank statement by the bank. This is here to reflect in the what? Cash book. Check totaling 430,500 has appeared in the payment side of the cash book, but not reflected in the bank statements at the time of what? Reconciliation. Whatever is in the credit side of the cash book. Okay? Are you there? Whatever is in the credit side of the cash book as reflected. Okay, as reflected. Hold on. Have the identified discrepancies. So with this, we prepare the adjusted cash book. So what's the first item here? The cash book balance as at February ending showed a credit balance of 126,000. Okay, remember I said credit balance means what? That the credit side is higher than the debit side. So that means the balance brought forward will be in the credit side. So now we have here Mawina Ventures adjusted cash book balance brought forward 126,000. Okay, all right. The next item here, a dividend of 25,000 for shares held in public limited company has reflected in the bank statement only. Okay, so if there is a dividend paid for shares held, that will be a direct what? Credit. So that means it's credited into the bank statement. Okay, so it ought to appear in the debit of the what? Cash book. So we have dividends in the debit side here, 25,000. The next one says a check totaling 350,000 has not been presented as at the time of record. That's unpresented check. That will go to where? Your bank reconciliation statement. So we hold on. The bank has a standing order to some payment on behalf of the business to the tune of 56,000. This has not reflected in the cash. So if the bank is making some payment on your behalf, it means that what? They will debit you in the bank. So that means what do? You credit your cash book, Abi? That's what you're doing here. Standing order 56,000 credit in the adjusted cash book. The next one says bank charges and VAT totaling 12,500 has been debited to the bank statement by the bank. This is here to reflect in the cash book. If the bank charges you for bank charges, they will debit you in the bank. So that's the payment that you're supposed to credit in your what? Cash book. So we have bank charges here, 12,500. I think that's about the whole. The next one here says checks totaling 430,500 has appeared in debit side of the bank of the cash book, but not reflected in the bank statements at the time of reconciliation. So these uncredited checks. Remember, so that will go to where? The bank reconciliation statement. So we have all the items here in the adjusted cash book. We have credit side 126, 56, 12,500. So total here is 194,500. So if you minus the debit side from 8, you have a balance carry down of 169,500. As you can see, the carry down is in the debit side 169. So that means the brought down will be in the credit side. And I told you that if you have a credit balance in the adjusted cash book, if you're taking it to the bank reconciliation statement, it must be what? Negative. So we have balance as per adjusted cash book 169,500 negative because it's a credit balance. Okay, if it were to be a debit balance, it would be positive, but because a credit balance, negative. So what would we add on presented checks? The question gave that was checks totaling 350,000 has not been presented as at the time of reconciliation. So we have add on presented check 350,000. That is it. So minus 169,500 plus 350,000 will give us 180,500. So what's the next one? Less uncredited checks that has been given to us here. Checks totaling 430,500 has appeared in the debit side of the what? Cash, but not reflected in the what? Bank statements at the time of what? Reconciliation. So 430,500, you're lessing it bracket. So plus 180,500, 430,500. That gives us minus 250,500. That's negative. So what do we have as the bank statement balance? They say the cash book balance as at the February ending showed a credit balance of 126,000, while the bank statement balance showed a debit balance, that's OD, of 250,000. That's negative. So as you can see, OD here is negative 250,000. OD here is negative 250. So that means you have cleared the reconciliation differences. Okay. So This is the illustration for preparing bank reconciliation statements after adjusting the cash book, as well as without adjusting the cash book. Go through it carefully, pick up questions and try to solve. That's my encouragement for you. If you have questions or clarifications, you can reach me on 081-3650-6356. Send me an email, jeremiah.doso@gmail.com, or put questions in the comment section. I'll be there to reply you with answers. Thank you.